Inflation is like a sneaky price hike on everything. It means your money buys less over time. Imagine your favorite candy bar. Last year it cost $1. This year it's $1.10. That's inflation. Your dollar doesn't stretch as far. Inflation happens for different reasons. Sometimes demand is higher than supply. Think of everyone wanting the latest gadget. Other times production costs rise. Like when gas prices increase, making goods more expensive to make and transport. Understanding inflation is key to protecting your finances. We work hard for our money. It's important to make sure it keeps up with rising prices. Stay tuned for practical tips to do just that. If you found this helpful, please like and subscribe for more tips. Remember that candy bar? Inflation impacts your everyday purchases. That $1 you saved last year won't buy the same amount today. This is called reduced purchasing power. It affects everything from groceries and gas to rent and entertainment. Let's say you have $100 today. With an annual inflation rate of 3%, that same $100 next year will only buy you what $97 buys today. That's $3 less in purchasing power. Over time, even small inflation rates can erode the value of your savings. This is why it's so important to be mindful of inflation. You need to make sure your income and savings are growing faster than prices are rising. Don't worry, we'll explore strategies to combat this. Inflation can also impact your investments. When prices rise, the returns on your investments might not feel as rewarding. Let's say you're earning a 5% return on your investment. Sounds good, right? But if inflation is at 3%, your real return is only 2%. Some investments handle inflation better than others. Fixed income investments, like bonds, can lose value during inflation. This is because the interest payments stay the same, even as prices rise. But don't worry, there are investments that tend to do well during inflation. Stocks, for example, can offer some protection. As prices increase, companies often raise their prices too, which can lead to higher profits. Real estate is another example. As inflation rises, so do property values and rents. Section 4. Safeguarding your savings, smart moves in an inflated world. So, how do you protect your hard-earned money from inflation? The key is to make your money work as hard as you do. One way is to look for savings accounts with higher interest rates. Another strategy is to invest in assets that have historically outpaced inflation. We talked about stocks and real estate. These investments can help your money grow faster than inflation. Remember, investing involves risk. It's essential to do your research and consider your risk tolerance. Diversifying your investments is also crucial. Don't put all your eggs in one basket. Spread your investments across different asset classes to minimize risk. Section 5. Outpacing inflation. Growing your wealth strategically. Don't let inflation discourage you. You can still grow your wealth strategically. Negotiate your salary. Ask for a raise that keeps pace with or exceeds inflation. Consider starting a side hustle. The gig economy is booming. Finding creative ways to earn extra income can boost your savings and outpace inflation. Remember, knowledge is power. Educate yourself about personal finance and investment strategies. Stay informed about inflation trends. The more you know, the better equipped you'll be to make sound financial decisions. Section 6. Take charge, stay ahead. Your financial future is bright. Inflation is a fact of life, but it doesn't have to control your finances. By understanding inflation and taking proactive steps, you can protect your money and even make it grow. Remember, you are in the driver's seat. Make smart choices, invest wisely, and stay informed. With the right knowledge and a proactive approach, you can navigate inflation and create a secure financial future for yourself. You've got this.